Yo, what is going on, guys? My name is Nick, and if you're new here, welcome to the channel. In today's video, I'm going to be talking about my specific investing strategy that I'm going to be employing during this current stock market crash that we're seeing, along with a lot of the positions that I've already built up and more stocks that I want to buy in the near future. In my personal opinion, the stock market is presenting an amazing opportunity right now that we're going to look back on in the future as one of the best times to buy stock. But with all of the changing news and all of the fear and panic that keeps bombarding us every single day, it seems, it's honestly really tough as a long-term investor to keep a clear mindset when investing in times like this. And that, of course, can lead to us making very bad investment decisions that are based on emotions like fear and panic rather than actual fundamentals of companies and businesses, and that is obviously a bad thing that we don't want to happen. So that's why I'm taking a more strategic approach to investing within this stock market crash and figuring out exactly what I want to buy and then the specific asset allocations to each of those assets in my portfolio. And hopefully this video too will help you as an investor navigate through these tough times and figure out some investing strategy. So if you do enjoy this video, make sure to give it a big thumbs up for the YouTube algorithm. I really do appreciate it. And then if you haven't already, definitely consider subscribing down below for more weekly videos just like this. So with that said, let's get into my specific investing strategy that I'm going to be implementing during this stock market crash, along with a lot of the positions that I've already bought into and that I plan on buying into further. All right, now in the current market that we are experiencing right now, I will be totally honest with you guys, I am a buyer of stocks. Despite all of the negativity surrounding us in the media right now, along with the potential for things to get much worse, I'm still buying companies that I see are great deals at the moment. But what I am not doing is trying to wait for the market bottom and trying to time the market, as they say. Recently, I've had tons of people asking me when they should start buying stocks or when I think that the market's actually going to rebound, and I have absolutely no clue. That's the honest truth. And we should not be thinking about it that way as long-term investors. And there's actually so much research to show that time in the market beats timing the market over the long term. Just to give you an example, there was a study that analyzed the performance of the S&P 500 index, the top 500 companies in the US, from the period of 1980 to 2018. And what they found was that if you miss only the top 5 trading days over that period of 38 years, meaning you're not invested and you're holding cash, that would drop your overall returns by 35%. And what we find in history is that most of the best days in the stock market happen soon after times like we're experiencing right now, because so many stocks are oversold and there's so much pessimism in the market. But as soon as there's a thread of good news, it's going to spike upward moves really quickly. I mean, just look at the performance of the stock market right after the 2008 financial crisis. It actually moved up over 50% in a period of 1 year. So that's why, as a long-term investor, I'm only concerned with staying invested and averaging my positions down as the stock market falls further, to know that I'm going to take advantage of those gains whenever they come. Now, in terms of my specific investing strategy at the moment, I'm going to be taking a more conservative and disciplined approach to investing than usual. I'm looking to invest in companies that I like to call the dream team, which are basically the best of the best, and now is not the time to be investing in very speculative investments that could go out of business. So first of all, I'm picking companies that I know are going to be able to survive a recession if it does happen in the near future, and so that's why I'm looking at the company's balance sheets for a strong financial position and a large amount of cash on the balance sheet. And secondly, I'm looking for companies that are paying dividends currently and that I know will be able to continue paying those dividends well through the recession if it does happen. But of course, along with individual stocks, I do plan on putting a lot of my money towards the general market performance through ETF investing, and that I'll get into a little bit later in this video. So in the first part of this video, I'm going to be discussing one of the major portions and focuses of my investment portfolio throughout this crash, and that is going to have to be Canadian dividend stocks. So for Canadian dividend stocks, I plan on putting about 30% of my invested capital into it in terms of my entire portfolio. And one of the reasons why I'm doing this right now and not investing more into US dividend stocks is, first of all, because of the currency exchange rate, and oh my gosh, the Canadian dollar lost so much value compared to the US dollar lately. Typically what we found in the past is that whenever there's a stock market crash or something happens that's dramatic in the market, there's going to be a fluctuation in the dollar and the currency exchange values. And unfortunately for all of my Canadian friends out there at the moment, the US dollar is so much stronger than the Canadian dollar, and that would end up diluting our returns whenever we buy into US companies. But the second reason why I want to buy Canadian dividend stocks over US dividend stocks at the moment in my TFSA portfolio is to avoid that dividend withholding tax of 15% that you would have to pay on those US dividends dividends in your account. But aside from many of these small details that may not matter for most investors out there, I do think that Canadian dividend stocks have very attractive dividend yields at the moment. I want to buy into these companies right now to be able to lock in these high yields that will continue paying out dividends long into the future if that company is able to support the dividend. And once the stock prices actually go up and you start making a lot of appreciation on the shares, you're still going to be making that huge dividend that you bought into initially. So it's a really good deal for many investors out there. Now I'm going to share many of the companies that I am looking at the moment and may have bought into already, which I will reveal at the end of the video. And keep in mind that all of these companies have not cut their dividends in the last recession, being the 2008 financial crisis. And the first one on the list here is Fortis with ticker symbol FTS.TO, and they are a huge utility company over here in Canada, posting a dividend yield of nearly 4% at the moment, which I think is very safe based on their payout ratio and their dividend payment history. Now, another company on the list here today is the Canadian National Railway with ticker symbol CNR.TO, and this has got to be one of my favorite companies that I do own in my portfolio currently and that I am buying more of. Canadian National Railway is one company with a huge moat because they have so many railway tracks across North America, and it's very hard for another company to penetrate into this industry. Now, they do pay a dividend yield slightly less than 3% at the moment, which really isn't the best compared to all of the companies that I'm going to talk about, but they do have a very low payout ratio and they have been increasing that dividend very quickly year over year. Now, the third dividend stock I'm looking at right now is Sun Life Financial, which is a life insurance company over here in Canada and actually one of the biggest in the world. What really surprises me is that they were able to continue paying that dividend throughout the 2008 financial crisis, which shows a very strong business model, and I think they'll be able to do that well into the future based on their current payout ratio and just the overall strength of this company overall. Now, another one that I'm looking at is Intact Financial with ticker symbol IFC.TO, and this one is a property and casualty insurance company, and they're actually very strong in the same position as Sun Life Financial, and I think they have a really good dividend and a really good history behind it too. But finally, what you guys have been waiting for this entire time, the Canadian banks. Which ones am I buying? And I have made some buy orders on the Royal Bank of Canada with ticker symbol RY.TO. I've also bought into the Bank of Nova Scotia with ticker symbol BNS.TO, which has an extremely high dividend yield right now. It's ridiculous. And then I'd also love to buy into TD Bank with ticker symbol TD.TO because they have been hit really hard, and I think that they have a lot more growth than some of the other banks, so that's a good sign. And if you guys do want a more in-depth analysis on the Canadian banks, I just made my last video on that, so definitely be sure to check it out. All right guys, now the second part of my investing strategy here that I'm going to be focusing on is investing in US growth stocks, with about 20% of my cash flow going into that. What we find is that some of the strongest balance sheets in the entire US stock market are found within the US technology companies because they've been able to grow their earnings so quickly over the last bull market. And I'm probably going to be striking at these companies a lot more heavily when the Canadian to the US dollar actually reduces a little bit and our dollar gets stronger, so I get a little bit of a better currency exchange rate there. Now, one of the main reasons why I want to invest in US growth stocks specifically is because of their balance sheets and having so much cash. They will be able to survive through the next recession if it does happen. And the second reason why I want to buy into these US growth stocks is because of the capital gains, because they are totally tax-free in a tax-free savings account, which is a little bit different from dividends versus Canada and the US. And guys, the fact is that we really don't find that many growth stocks over here in Canada, so I really want to expose my portfolio to more growth through these US technology companies and other growth stocks. Now, one of the companies that I was debating buying even before this market correction, but never really got the chance to, is Apple, ticker symbol APPL. As we all know, Apple is the biggest company in the stock market, and it is Warren Buffett's biggest investment of all time. And they are currently holding about $200 billion of cash on their balance sheet. So I personally believe that with all of this cash, Apple might make an elephant-sized acquisition or multiple smaller acquisitions, and that way it's going to prepare them for a very good bull market whenever we get out of this crash and this market condition. Now, another one I've been looking at is Facebook, ticker symbol FB, and this one is holding about $55 billion in cash on their balance sheet, which will be easily enough to weather the storm when advertisers stop paying a lot of advertising money during this current period. And for that reason, we've seen Facebook stock drop quite dramatically over the recent period. However, I do think that they're going to recover very quickly as soon as things turn around, and Facebook is going to make a lot of advertising revenue as we can see from all of their past growth and their revenues growing at about 20 to 30% every single year. Now, the third growth stock that I am looking at to buy is potentially Google with ticker symbol GOOG, and they have about $120 billion in cash on their balance sheet. What we found recently is that many people are spending a lot more time at home, and that means they're spending more time on YouTube naturally, as well as searching inquiries on Google itself. And so I believe that that's going to bring a lot more traffic to the Google platform over time and potentially lead more advertisers to that company. So they might lose on advertising revenue in the short term, but I believe that in the long term, this is actually a good thing for them and that they will do very well and continue being the leader in advertising across the globe. Now, the fourth growth stock that I'm looking at right now is Microsoft, because I love Microsoft. They were so well diversified across many different sectors like cloud computing, gaming, personal computing, etc., and all of the above. The company has over $130 billion on their balance sheet in terms of cash and cash equivalents, and I think that they're so well prepared for this time because a lot of people are spending more time at home gaming, or they're spending more time on their computers doing work, etc., and so I think that they're going to do very well as soon as this market correction ends. Now, the second to last one here on the list is an amazing company that I do own, and this one is Visa with ticker symbol V. Now, Visa may only have $12 billion of cash on their balance sheet, but I think they're going to do very well right after this period that we're experiencing right now, because a lot more people are spending this time at home and making more online purchases through Amazon and other online retailers, which will benefit Visa. And finally, guys, the last company that I have on my list of growth stocks is Berkshire Hathaway with ticker symbol BRKA.B. Now, many of you may disagree with me in calling Berkshire Hathaway a growth stock, but Warren Buffett has proven to beat the market performance over the long term, and I think that's one way that you can constitute a growth stock. So I am really excited into buying into Berkshire Hathaway because they do hold about $130 billion in cash on their balance sheet, and you can almost guarantee that Warren Buffett is going to be making some type of big acquisition or multiple within this stock market crash. All right, guys, now getting into the final area that I'm going to be focusing on in this stock market crash, and that is going to be ETF investing. I've actually learned a lot through this stock market crash already, and I'll probably end up posting a video on that. But for now, one of the outcomes of my investing style is that I want to focus more on ETF investing. I'd like to put about 50% of my cash flow into ETFs, which will allow me to diversify my portfolio a lot more, and that is the first and foremost reason why I want to get into ETF investing. In a time like we're experiencing today, there is of course a lot of opportunity to buy into individual stocks, as I've been doing myself. However, along with the higher reward potential of buying into these individual stocks, there is a lot more risk, and that is because we simply don't know how long this market crash might last. And for all we know, as individual investors, some of these individual stocks might not be able to handle the pressure of the recession if it is coming on the horizon, and that would mean bankruptcy or very, very low stock prices. And so even though I am picking really great companies that I know will probably survive through these recession periods, I do want to relieve some of my stress by taking a more passive approach to investing and investing in ETFs that track the general market performance. And the specific ETF that I would like to buy into more is the Vanguard S&P 500 Index ETF over here on the Canadian exchange with ticker symbol VFV. This ETF is simply the Canadian dollar hedged version of VOO on the US exchange, and it's had a really good track record of performance and distributions, which are dividends for an ETF. And one of the main reasons why I want to buy into this ETF and only this ETF is because many other ETFs really can't outperform the S&P 500 over the long term. But along with that, it also provides very good diversification amongst the top 500 companies in the US, which is always changing, so it always provides some very good security. I'll even go as far to say that the only investment that you probably ever need in your lifetime is to buy into this type of index through an ETF into the S&P 500, because it's going to produce you average market returns, and you can almost be guaranteed that it's going to do well over the long term. Not to mention that the management expense ratio on this ETF in the Canadian dollar version is only 0.08%, which is basically nothing. So as the market continues to fall, I do plan on continuing to buy into this ETF and averaging my position down to a point where I have a really big position in the S&P 500. All right, so as promised at the beginning of the video, I said I would share all of my positions that I've been buying into, and that I'm going to do right now. I put about $3,000 into the market this past week because it has been dropping quite a lot. So the first stock that I bought into is the Royal Bank of Canada with ticker symbol RY.TO. And this is one of the companies that I said I was going to buy into in my Canadian bank stock video. Now the first buy I made ended up being about 6 shares at an average cost of $84.93. And then the second purchase that I made was also 6 shares at an average cost of $79.50. Now the second position that I bought this week was the Bank of Nova Scotia with ticker symbol BNS.TO. And oh my gosh, this company has an amazing dividend yield right now. And to show my love for the company, I bought 10 shares at an average cost of $51.69. And that I hope to build up a little bit further in the near future. All right guys, now the third company that I bought into this past week was the Canadian National Railway with ticker symbol CNR.TO. And this is a company that I talked about earlier having such a large moat and that I love it so much. I ended up buying 5 shares at a clean amount of $98 per share, and I hope to build this up further as well. And then finally, I did end up buying into the ETF that I was talking about, the Vanguard S&P 500 Index ETF on the Canadian dollar hedged version with ticker symbol VFV.TO. And so for this one, I ended up making 2 purchases of 8 shares each, the first one being at an average cost of $61, and then the second one being at an average cost of $59.50. And like I said earlier, I plan on building this up quite a lot more and averaging my position down to get a really big position in this ETF. But anyways, thank you guys so much for watching the video. I really do appreciate it. If you did like my stock picks and my investing strategy, let me know down below and what your investing strategy is and what picks you're gonna be buying. So as always, if you did enjoy this video, make sure to smash that like button. It really supports my channel. And then if you haven't already, definitely consider subscribing for more content on personal finance, business, and investing in the near future. And I will see you guys in the next one.